Hey everyone, Edward here. So let's talk Alibaba stock, ticker symbol BABA. They've been having a lot of controversy, especially with Jack Ma and the CCP. There's also news that they might actually be delisted from the New York Stock Exchange. If we look at the chart here, they've been getting beat down really hard, so it's looking like a deal at the moment. Alibaba is a behemoth of a company, and for those that don't know, they actually generate more profits than Amazon. They're in the perfect market to dominate, especially with their business model. At the time I'm recording, they're trading at about a $625 billion market cap at about $236 per share. So as usual, I'll start with the first part of my analysis, which is a background and overview of the company. I will start with the company's mission because we have to understand why the company is doing what they're doing. Alibaba's mission is to make it easy to do business anywhere. They want to enable businesses to transform the way they market, sell, operate, and improve their efficiencies. Alibaba is currently one of the biggest tech companies in China that's neck to neck with Tencent. Their main focus is their e-commerce business that has dominated in China. But there's way more to this, and I'll get into that in just a second. So the origin story of Alibaba was that Jack Ma actually started this company in his apartment with 17 friends and students. He knew that the internet was going to be the next biggest thing, and he didn't want to lose the opportunity. He realized that most of the tech companies were located in the US, so they had domestic advantage. The thing that got Alibaba's ball rolling was their first investor, who is Masayoshi's son, and he is the CEO and founder of SoftBank. Masayoshi invested about $20 million into Alibaba in the year 2000. To be completely honest, I thought that Masayoshi was kind of crazy to actually do this because the company had no revenue, no profit, or proof that they can scale. But what I found out was that Masayoshi saw the fire and the passion that Jack Ma had in his eyes, and that was enough for Masayoshi to invest into Alibaba. Remember, the greatest asset in the company is the leadership, not the products or the service. This is SoftBank's greatest investment ever because when Alibaba went public in 2014, Masayoshi's $20 million turned into $60 billion. Fast forward to today, Alibaba is worth about $625 billion. Now I want to get into a little bit about Jack Ma, who was the CEO and founder. I love his wisdom and his captivating nature. If you haven't seen him talk in an interview, I highly suggest you do so, except the one with Elon Musk. That one was not the best. He's definitely a hustler and visionary. He's been through the toughest time just like every other entrepreneur. He's shown that he can actually make really great decisions, and Alipay was one of them. His boardroom told him that it was a stupid idea, but Jack Ma didn't care. He just wanted to know if people would use it. He didn't care whether it was a stupid idea. He just wanted to know where the opportunity was. Nevertheless, in my opinion, I consider him one of the top 10 greatest entrepreneurs of all time. Now I want to transition into how Alibaba operates, their margins, and how they make money. Alibaba's main business is Alibaba.com, which is their B2B platform where suppliers can actually sell their products worldwide. Think of Alibaba as the middleman between the two businesses. If any small to large businesses want to source a product, then Alibaba.com would be the first place to go. Most Amazon FBA and Shopify gurus on YouTube actually source their products on Alibaba.com because it's the cheapest in terms of quality. Alibaba has domestic advantage because China is the biggest manufacturer of goods. They have over 150,000 merchants on their platform, and under the whole entire e-commerce umbrella, they have over 700 million monthly active users, and that growth ain't stopping at the moment. Next up, Alibaba is also dominant in the cloud computing sector. They are the biggest cloud computing company in China, and again, there's domestic advantage. However, in terms of worldwide, they only have about 6% of market share. But the thing that we have to consider is that Alibaba's cloud business is actually growing a lot faster than their competitors. In 2020, they reported about 50% growth year over year, so they are catching up. The downside to this is that this business hasn't generated a profit yet, so this is worth keeping in mind. In 2004, Alibaba announced Alipay, which was very controversial at the time in China. Like I said in the beginning, Jack Ma knew that this was going to be a big thing, and he didn't care what people said about it. Today, this is the biggest fintech payment platform in China. Alipay was so huge that they decided to actually separate it from Alibaba. Today it is known as Ant Financial Group. This company was initially supposed to go IPO in Hong Kong in 2020, but due to some changes in the financial regulations, they decided to back out of the IPO and reconsider. Nevertheless, based on their recent financials, they reported about $10 billion in revenue, and $3 billion of that turned into profit. Since they're mainly software based, they don't need a lot of OPEX to operate the company, which is why they generate a lot of profit margins. Another advantage here is the population size of the market that they're in, which is China. The fintech world in China experienced experienced exponential growth, and they're sitting at about 1.3 billion users at the moment. And for those that don't know, that's literally China's population. And this is what they call a monopoly. So the next business under Alibaba is Taobao, which focuses on the B2C business model. This is currently China's largest shopping website, so just think of this as the Amazon or eBay of China. So what's unique about this business is that they don't charge any transaction fees, so joining this platform is basically free for any merchants. This is what I call growth hacking. Because of this policy, a lot of businesses started using the platform. This saves merchants thousands and millions of dollars because there's no transaction fees. Now you might be asking, then how does Taobao actually make money then? Well, they actually offer ads to their merchants where they can put their products or services all over the site, similar to how Kijiji works, where they can bump up ads if the merchant pays a certain fee. I really love this business model because this is empowering micro entrepreneurs, and Alibaba is just monetizing all of it. So the last business I want to talk about under Alibaba is Tmall, which is really similar to Taobao, but they offer multinational brands such as Nike, Apple, Adidas, and others. This business is more targeted towards the middle class in China. Unlike Taobao, Tmall merchants actually have to pay an annual fee, deposit fee, and a commission fee. This is where most of the revenue are generated, so the business model is really similar to Amazon and eBay. So now I want to get into the disadvantages of Alibaba. So the first one is the recent news that Alibaba might actually get delisted because the US government doesn't want any companies that have really close ties with the Chinese military in the stock market. The only fear that the US government has is how bad of an impact this will be for the stock market, and let me just say, in my personal opinion, it will be really bad. The good news is that there was a recent article saying that Alibaba is not on the blacklist anymore, so they might not actually be delisted. Now I want to get into my next point, and I don't think a lot of people know about this, but when you buy Alibaba stock, you technically don't own any part of Alibaba. You're actually buying shares that Alibaba gave to a variable interest company in the Cayman Islands who owns rights to those shares. So in the end, investors don't actually have any voting power or own any part of the company. If this is something that you as an investor really care about, then this could be a disadvantage. This is a loophole that Alibaba figured out. The next point I want to make is China's accounting scandals. For those that are not aware, US and China's accounting practices are different. There is no way for the US to audit their financials to see if they're actually legitimate, which is why many Chinese stocks, like in coffee, were delisted from the stock market because they inflated their sales and pretty much lied on their financials. The last disadvantage is that Alibaba has to do everything to please the CCP. They walk a really fine line when they work with the government. Recently, Jack Ma criticized China's monetary system, and the CCP was not pleased about that, which is why they decided to attack Alipay or Ant Financial Group of having a monopoly, because they technically do. Headlines were everywhere about this, and the stock tanked, and I'm not surprised about that. So it was a really great buying opportunity for the investors, but it just shows how much the government can control their company. Now I want to get into the valuation and the financials of Alibaba. If we look at their growth, they're still growing at a really crazy rate of 30 to 40% year over year. Based on my estimates, I'm predicting that Alibaba will grow their gross profits by about 44% and their EBITDA by 24% in their next fiscal year. They have a cash conversion ratio of about 77%, meaning 77% of their EBITDA are converted into cash for the company, which is great. In terms of their valuation metrics, they're trading at about 14 times forward gross profit and 20 times forward EBITDA, which is very attractive at the moment. In terms of their financials, they have about $467 billion in cash and a total debt of $138 billion. They have a current ratio of about 1.99, which is great. They'll have more assets than liabilities within the next 12 months. They reported insane profits in the last couple quarters and years. Not only that, they've been bringing in free cash flow as well, and they're increasing this year over year. All in all, this company meets my financial requirements. They have more cash than debt. They increase revenue by more than 20% every year. They have a current ratio of more than 1. They have free cash flow, and they're profitable, and it seems like they're not stopping anytime soon. Now we're getting to the last part of the video, which is my thoughts about this stock. All in all, in my opinion, I think that this stock is trading at a very attractive valuation. I kind of wish that Jack Ma was still operating this company. I believe that these numbers would be totally different if he was running the show. Their growth is insane, and I think this is a great compounder stock for the next decade. They're more profitable than Amazon, and they're growing at about 20 to 25% year over year. In my opinion, if anyone wants international exposure in their portfolio, I think this is a great pick. With all the news regarding Ant Financial Group, I think this is all just noise. noise. In the long term, I don't see a problem with this because majority of the revenue comes from core commerce. Let's be honest, 1.3 billion users of Alipay will not vanish the next day because of this whole entire controversy. Remember to not be fearful of the news. The downside to Alibaba stock, in my opinion, is the loophole that they have where investors don't technically own Alibaba shares. This is definitely sketchy for those that actually care about this. That wraps up for this video. Thank you for watching. I'll see you guys next time.